Tell you what, in the interest of everybody's time and respecting everybody's time, I think we'll go ahead and get started. Good to be with everybody this afternoon or this morning, depending on where you might be, if you're on the left coast like Richard is. Good to have everybody here for what I think is going to be a very informative program for everybody. We became aware of and got introduced to Richard and Nicole and the folks from Stream a little while ago. And the more we heard about the platform and the program, the more we thought it would be valuable for you to hear about it as well. So we asked Richard if he would give us some insights here today. I mean, premium finance is one of those areas that we hear about a lot, we talk about a lot, but in so many instances, it comes down to the individual just not meeting the relatively strict criteria to be able to qualify for what I'll call a conventional premium finance platform or program. Now, that's not to say that today is going to be for all of your clients. Don't take that the wrong way. But I think what you'll see as Richard goes through his prepared comments and so forth, that it's going to be eligible, it's going to be open to a lot more of your clients than might otherwise be the case with a conventional platform and program. So we know the strength of premium finance, and I don't want to steal any of Richard's thunder. I'll let him do that. He's far better equipped than I to share that with you. But we thought that it was a great way to complement what you're already doing and maybe bring in some of those, not only bring in higher premium cases from the perspective of your practice and what you're trying to do, but also give your clients just a terrific way to fund their needed life insurance that they might have. So just from a housekeeping standpoint, as usual, we're recording the session today. We'll have it up on our website within a couple of days. Connor's pretty good about that. So if you need to revisit the presentation later on, you can do that. We've got the lines muted, but there is, as hopefully everybody has at the bottom of their screen, you should see a Q&A box. So if you have any questions for Richard as he's going through his comments, go ahead and type your questions into that Q&A box, and we'll make sure that we get to those before we cut him loose for the day today. So looks like we've got some other people that are joining, but I tell you what, Richard, great to have you here. Thanks so much for carving out some time for us. Good to have you on the docket today. I'm going to go ahead and turn it over to you. You're going to be sharing some visuals, so I need to open up the sharing, correct?
Yes, please.
You should be good, but go ahead and see. Let's see, share
I
settings.
just sent a request.
Yeah, it looks like you should be good to go. So go ahead. The floor is yours, Richard. Welcome.
Appreciate that. Thank you so much, Bob. Very nice to meet everybody here on the call. My name is Richard DeSantis. I run the national sales here for the team at Stream. Unfortunately, one of the other co-founders, Nicole Rex, wasn't able to make the call today, but I will walk you through our presentation. I'll walk you through our program. Quickly, just a little bit of a background on me so you know who I am. Again, I run the national sales team here. We have another individual on my team that's fairly new. Her name is Lily Chen. She's new to our team. She joined back in September of last year. She's new to the industry, but she's fully up and running, so she can offer any kind of sales support that you guys need. My background, I've been in financial services since 2006. Started my career in private banking, wealth management. Did that for about 14 years and then went independent as an independent financial advisor working for a local RIA here in Southern California before I joined the Stream team about 2.5 years ago. I'm going to share my screen and walk you guys through the presentation. And like Bob was mentioning, if you guys have questions, either while I'm going through the presentation, and I don't think, Bob, so if questions do come up while I'm going through, feel free to stop me because I don't think I'll be able to view them while I'm
Sounds
going
good.
through.
Sure.
Or we could just open it up for questions at the end. But really excited to share all of this information with you guys and really hope you guys like what we're about to see here. All right. Can everybody see the screen okay, Bob?
Looks good, Richard.
Okay, perfect. Well, again, we are the Stream Protection Plan. We are a small case platform for premium finance life insurance. For all of those that are familiar or not familiar with premium finance, I'm going to go over just a basic overview of our program. I'm going to go through a basic overview of what traditional financing looks like and how we compare to that, as well as walk you through some of our key benefits on our program, some of our different sales opportunities where we see the best fit for this program, and then open it up for some questions at the end after I go through a couple different case studies. So that's the agenda for today. And here we go. So Stream was established about 5 years ago, right in the beginning of COVID, where the two co-founders kind of were putting their heads together. They've been in the industry, both Tim and Nicole combined about 45 years, and have been conducting a lot of traditional premium finance cases over those different time spans. And really selfishly, they saw all the benefits that came along with traditional financing that clients were able to take advantage of. And really, they wanted to be able to participate in a program like themselves, but didn't quite meet all of the strict guidelines that traditional financing brings along. And for those of you who don't know about traditional financing or aren't aware of what the hoops and everything that clients have to typically jump through, normally you have to have at least 10 million in net worth to qualify for financing a life insurance policy. Not only do you have to have that net worth, but you also have to have at least about $500,000 to $1 million of income. You're going out to the bank as the client yourself and applying for the loan and personally guaranteeing that loan for all that additional premium that's going to go into the policy. In addition to that, you're having to post collateral to cover any shortfall between the loan premium and the cash value in the policy. So there's a lot of different pain points and hoops clients typically have to jump through. And number one, the two co-founders, they don't quite meet that ultra high net worth quite yet, but they earn a good living. They both own businesses. They have additional surplus that they could put into a program like this, but again, didn't quite meet that ultra high net worth status quite yet. So they put their heads together and wanted to figure out a way where they could democratize the strategy down to what we call Henrys of the world, high earners, not rich yet, or accredited investors. So that's our minimum barrier of entry, is you need to be an accredited investor. I will go over what that looks like in just a second, but what Stream is acting as in this whole entire picture is we are marrying the bank funding with the insurance product, the Index Universal Life product with the carrier. So how does this all work? This is our overall strategy. It's a IUL chassis again, where clients are paying in for a portion of the premium for the first 5 years. It's a 10-pay design, meaning that the bank is going to fund the policy for a full 10 years. And depending on the client's age, they're going to put up a portion of that premium for the first 5 years. And then the bank will also cover 100% of the premium in years 6 through 10 on behalf of the client. The real things to stress with our program is we eliminate all of the pain points clients have to do when they participate in a traditional financing design, where we don't ever require our clients to post collateral, personally guarantee the loan, or apply for the loan themselves. They're not going on the loan application. It's not going to show up on their credit report. Their true financial responsibility with our program is to pay a portion of that premium for the first 5 years, and then they're done. The 3 different age brackets when it comes to how much leverage we can bake into our strategy are as follows. So I'm going to use $100,000 total premium being paid into the policy for 10 years by the bank. If we have a client age 50 or older up to our max age 60, so from 50 to 60, clients would be responsible for 50% of that premium, or $50,000 in that $100,000 case. The bank's going to match that $50,000 for the first 5 years, and then put in $100,000 for them years 6 through 10. If you have a client now that's in their 40s, they're going to be responsible for 40% of the premium, or $40,000 in that case. Bank will put in 60 for the first 5 years, and then 100,000 the remaining 5 years. And then our last bracket, I'm sure you guys can guess, anything under the age of 40, so 39 all the way down to newborn, which is also one of our nuances with our program, is we can do this on juveniles. They're going to be responsible for 30% of the premium for the first 5 years, or 30,000 in that case, 70,000 from the bank for the first 5, and then 100,000 for the remaining 5 years. So the younger you are with our program, the more advantageous and the more leverage that we can build into the structure for them. Again, Stream is doing all of the work on behalf of the client behind the scenes. We are already pre-approved with the banks that we're using for our funding. We have 5 different banks that we're currently working with. That way we can shop to get the best rate possible that we can for our clients, and we pass that directly through. Stream is not charging anything additional on those loan rates that we are receiving from the banks. We pass those directly through. And again, Stream is the one that is backing these loans. Client's only responsibility, no other commitments or guarantees needed by them, is just to pay those 5 years of contributions. This is the minimum client profile that we allow for somebody to be able to participate in the Stream plan. So clients don't need to have that ultra high net worth, but they do need to be an accredited investor. And what that means is if you're a single individual, you need to be earning at least 200,000 of income. Or if you're a married couple, a combined income of 300,000. If you don't quite meet the income threshold, if your family or your individual is at least $1 million in net worth, excluding their primary home, that would also qualify them for the Stream plan. We can do a few different types of designs when it comes to designing the policy for the client. I would say 90% of our designs are for that LIRP design, the retirement income design, where clients are wanting to accumulate those pools of tax-free income for later on in life. For the retirement income designs, those typically are up to age 55. And again, for that reason where it doesn't go all the way up to age 60, is because it takes somewhere between 12 and 15 years to pay back the loan to the bank. Therefore, clients don't want to have to wait, or it's not as attractive for them to wait till they're roughly age 75 in those older ages. But we can also do this on a death benefit only design for those larger estate planning cases, and we can do this both on a single or a second to die chassis. One other unique piece about our program is we accept 1035 exchanges into Stream. And that 1035 exchange can be utilized a couple different ways. So if you guys have existing clients that have life insurance policies that maybe either they're not funding any longer or the policy is not performing to their liking, if they wanted to 1035 exchange that into a Stream plan, they can, number one. Number two, they can utilize that 1035 as either just an additional dump in of cash to leverage that up, where the client will still come out of pocket for 5 years, or depending on the size of that 1035 exchange, that can be counted towards a portion of the first 5 years of premium or cover it in its entirety. Our minimum contribution for anybody qualifying as the accredited investor for our program, if they're age 18 or older and they're qualifying on their own, the minimum contribution is $20,000 a year for 5 years, or a total commitment of $100,000. Now, I did mention we can do this on juveniles. So if we're going to be qualifying either a parent or a grandparent in this case, and wanting to do some planning on their children, we call that our GenStream vertical or sales opportunity. We can go as low as $5,000 a year out of pocket if they're under the age of 18. We also allow for parents or grandparents to do this on their adult children or adult grandchildren. And if they're between the ages 18 and 30, we can go as low as $10,000 a year out of pocket. We also have no maximum on how much somebody can contribute to our program. So right now I'm actually working on an estate planning case where the death benefit is 20 million. Client is in their early 50s and they're contributing $650,000 a year for 5 years. So as long as the client can financially justify it and qualify for the insurance, we would allow for it in our program.
Hey, Richard.
Yes.
I'm going to go ahead and toss a question out there that came up in the Q&A. Another Richard is asking how this plan might differ from the Kaizen plan. And I'm guessing you're equipped to handle that question.
Absolutely. So a few of the different nuances that we touched on earlier is our leverage amounts. We offer 3 different types of leverage, the 30, 40, and 50% out of pocket, where Kaizen is 50-50 across the board, regardless of the client's age. Second thing that differentiates us is we can do this on juveniles. And we can also do this on a death benefit only design on a survivorship policy. Another thing that makes us a little bit different is our minimum threshold. So we require the client to be that accredited investor, where I believe their minimum income level is only 100,000. And the reason why we're looking for a little bit more of a savvy investor is because, especially in Southern California where I live, if you're making $100,000 a year, number one, you're scraping by, barely surviving. There's no way that you can put money or have that surplus to put money into a life insurance policy. So we're really gearing this towards those younger individuals that are making a really good living. They're already participating in a lot of their retirement plans out there, but have that additional surplus that they want to diversify their overall financial portfolio with. And then again, we can do this on juveniles. We also accept 1035 exchanges, which they do not. When it comes to the commission splits, so we always get this question where, well, how do we as agents make money? So you guys go on the applications for 75%. Stream goes on the app for 25%. I believe Kaizen is 30 to 35%, depending on the contract that you have with them, as far as the split that they get. So we offer more commission split to our agents. Those are some of the different nuances. And then also, one thing that we created is our piece of technology, which I'll show you a few different slides on that as we go along in the program. But we really make it as easy as possible for everybody involved, us, you guys as the agent, and the client, to be able to run through the stream process from start to finish. Everything through our portal is DocuSign. Everything is visible to the client. We offer a ton of support when it comes to either helping you guys position this to your clients, being a part of the sales meetings, helping you either create certain marketing pieces that you think will be useful. Whatever you really need from us support-wise, we offer that here at the Stream Plan.
Thanks, Richard. The other question that did come up, by the way, is it was asked if everybody's going to get a replay of the webinar. We're not going to proactively send a recording link out to everybody, but we will be adding this, as I mentioned at the beginning, to the recorded or archived webinar page at our website. So if you're not already familiar with that, if you go to advisorsib.com, which is our main website, you can just go to tools and resources and you'll find all of our archived training and webinars in there. This will be added to that. Like I say, usually takes us a couple of days to get it uploaded. So you won't get an email, Richard, but we will be putting the recording out there so you can go and listen and watch to your heart's content. We have one more follow-up, Richard. Peter asked if, will it work in funding a buy-sell agreement?
It will. So you're stealing my thunder here. So this is what we call our sales opportunities. So really, all of these are going to look the same, excuse me, on an illustration, but these are just really client profiles, you can call them, of what we see the most opportunity with out there in the field as to what the best fit would be for Stream. So I'm going to go through these. There's one on this that's not on the screen that's been becoming more and more popular as well. Excuse me. I got over the flu last week and I have this cough that's lingering for probably the next couple weeks. But these are our sales opportunities. Number one is LifeStream. So this is where we're just focusing on those Henrys of the world, those high earners, not rich yet, doing those retirement income designs or doing those death benefit only designs for estate planning purposes. Next one is BizStream. So this is where we're working with business owners. And business owners absolutely love this program for a few different reasons. Number one, again, clients are never responsible for personally guaranteeing the loan. It's not going to show up on their credit report, nor are they posting any collateral. So a business owner that's in growth mode, their business is growing and constantly expanding, this is not going to prevent them from going out and getting any additional funding that they need for their business. Because again, they're not guaranteeing the loan. But some of the types of programs that, or planning options that we do with these business owners are those buy-sell planning. So buy-sells typically funded with cheap and expensive term. Normally, excuse me, normally it's for that short 10-year period. It doesn't allow for any growth within the company. They're going to have to apply for more coverage if the company is continuously growing. So by contributing a little bit more into a permanent plan like Stream, with our design with an increasing death benefit, it's going to allow for growth within the company to cover that full buy sell. Number two, if the buy sell is never enacted, meaning none of the partners pass away, they can bonus the policies out to themselves. And now they've basically set up a deferred compensation plan for themselves. We can also do some key man planning too. So if these business owners want to reward and retain the key employees of their company, we can qualify them as the accredited investor and have the insurance be written on those key employees. Third one is GenStream. So these are those juvenile policies where those parents or grandparents want to do some multi-generational and legacy planning. And again, for those under the age of 18, we can go as low as $5,000 a year out of pocket. MedStream is the fourth one. So this is medical professionals, doctors, nurses, dentists, PAs. They're severely delayed in saving for their retirement with all the additional schooling that they go through, getting into a practice. This is a great way for them to play catch up. And they're very familiar with leverage in general with all the additional school loans that they have to apply for. Either they're purchasing a practice once they get in or equipment, financing equipment. Again, this is a great way for them to play catch up. They're only funding the policy for that short 5-year period. And then I would say the one that's becoming more and more popular now is in the professional athlete space, as well as the collegiate athlete. These NIL deals that some of these college athletes are getting now with these guaranteed contracts, or professional athletes to protect against, God forbid, an injury or a shortened career. This is a great way for them to protect against those things and only have to fund a policy for that short 5-year period and accumulate those large pools of tax-free income. We already have a couple NFL players that have participated in Stream, as well as NBA and NHL. Any questions that I'm not seeing on the opportunities or sales verticals?
Biff asked a follow-up on the buy-sell question. UCC filing? If yes, would you take a second position on the filing?
I'm not
I'm
familiar.
not sure what you mean by that, Biff. Can you expand on that a little bit, Biff? And while he's doing that, Shelly joined us and said she was wondering who the carriers that we're using. I don't know that you touched on carrier or carriers yet, Richard, but maybe you can touch on that while we're waiting to see if Biff has more detail.
Absolutely. So right now we have 3 different carriers that we can use on our platform. 2 of them are on a case-by-case basis. The primary carrier that we're using is National Life Group. The second carrier that we can use is Symetra, and we can use them on a case-by-case basis as long as the client meets their traditional financing guidelines. So they're a little bit of a higher threshold, than National Life Group, where National Life Group will accept that accredited investor level. With Symetra, we can use their IUL for Stream. If the client is age 50 and younger, they need to have that 2.5 million of net worth compared to the million with Stream and with National Life Group. If they're over 50 with Symetra, they need to have 5 million of net worth. And then the last carrier that we can use, we haven't used any cases with them yet, but it's Pacific Life, and their 10 million in net worth is their requirement. We're also in talks with Allianz, Columbus Life, Corebridge, John Hancock, and Lincoln to add them to our platform. We're not quite approved yet, but we're going through the process, and hopefully we'll be adding some of them as well very soon.
I don't have anything new from Biff as a follow-up to his question, so I'll admit I'm not sure I understand what he's asking there either, Richard, but if I get more detail, I'll come back to you.
Sounds good. All right, I'm going to walk you guys through some case studies real quick. And then again, we'll open it up for questions at the end. If anybody wants to spend some more one-on-one time after this, feel free to reach out to Bob. We can set up a meeting, all of us together, and kind of walk through and dive a little bit deeper into any of the information that we went over today.
Here's the follow-up, Richard. Thanks for that. Biff says UCC filing to safeguard liens, safeguard the bank. Again, I'm not sure I understand that world or what
Not
he's asking.
sure what he means by the second positioning on that. Maybe we can take that as like a
Yeah.
one-off.
Yeah, let's get together offline on that, Biff. And if you want to send me a follow-up email after we're done, I'll be glad to follow up with you. Thanks.
Perfect. So I'm going to walk you through a couple different case studies to kind of paint a better picture of really the benefits here of Stream. So what you're seeing on the screen here is a 40-year-old male contributing $25,000 a year for 5 years, showing that what that would purchase if he just went out and bought an IUL on his own, self-funded it, compared to using that same exact carrier's IUL, but funded it with Stream with the same 25,000 out of pocket for 5 years. So 40-year-old goes out, purchases the Summit IUL with National Life Group, $25,000 a year for 5 years. That's going to buy a death benefit of about $415,000. But by utilizing all the additional leverage that he can take advantage of with Stream, that's going to purchase almost 1.3 million of death benefit by all that additional premium that Stream will help fund on his behalf and participate in that same exact IUL. Not only is that almost $900,000 of additional death benefit starting day one, but the income on the back end goes from $37,000 a year tax-free, compared that to Stream to almost 83,000. So over $45,000 a year of additional tax-free income that he'd be able to distribute out of the policy starting at his age 65. Over his lifespan, that would be an additional over 1.1 million of income, and the death benefit at life expectancy would go from 214,000 to almost 700,000. So in total, utilizing the same contribution that he would self-fund the policy with, $25,000 a year for 5 years, he's getting $900,000 of additional death benefits starting day one, 45,000 of additional income each year tax-free, which is over 1.1 million of total income over his lifespan, and an additional $500,000 that will be left to his beneficiaries. Pretty significant numbers. This is that exact example on one of our illustrations. So you'll see $25,000 a year out of pocket. This might be a little bit tough to see. I don't know how big it is on the screen for everybody, but column four, 25,000 for 5 years. 62,500 is what the bank's going to contribute for that 10-year period. So the 25,000 is going to represent 40% of the premium because the client is in their 40s. Bank loan typically is repaid somewhere between years 12 and 15. We're showing that here, that loan exit in year 13. So anytime after the bank loan is repaid is when a client can start taking distributions out of their policy. In this design, we said we wanted that to be at age 65 of this almost $83,000 a year. So they put in a total of 125,000. If they lived to age 88, they would have distributed about almost 2 million out of their policy, still have about 700,000 of death benefit left over for their beneficiaries. Excuse me. Next case study I'm going to walk you guys through is a business owner. So this is one of the key elements that can really play a pretty significant item in the business owner space. So whether business owners sell their business in the future, have some sort of liquidity event, this can be a huge option for them when it comes to the Stream plan. In this design, it's a 43-year-old business owner, owns an HVAC business, and he plans to sell his business in the next 10 years. His goal is to really maximize his benefits that he can take out of the policy for him and his family to be able to live on, as well as to pass over and leave a legacy for his family. This design, he's contributing, oops, I'm sorry, I skipped the screen. He's contributing $50,000 a year for 5 years. With all that leverage from the bank, bank's going to put in a total of 125 for 10 years. Death benefit on this policy starts out at about 2.1 million. Normal loan exit is in year 12. on the way that this policy is done. One thing I didn't mention is how is that loan paid back to the bank? What we are doing is now going to the insurance carrier and asking them to give us a policy loan based on the cash value that's built up in the policy. What Stream is doing before we pay off that bank loan is we want to make sure that the policy has enough cash to support the policy, which is typically 10 to 20% net cash surrender value before we pay off that bank loan. And the reason for that is if the policy bank loan gets paid back and the policy gets a couple years of zeros, meaning the policy doesn't perform for a couple years after the policy loan has been paid back to the bank, we don't want the policy to collapse on our clients. So we want to have at least that 10 to 20% net cash surrender built up in there to help the policy carry through those potential down years after the loan has been repaid. In this scenario, that's what's done here, where we're taking a $1.3 million policy loan based on the 1.6 in cash that we have built up. Then when he retires at his age 65, he has about 130,000 of income that he's able to take out of the policy tax-free for the rest of his life. So he takes that out. God forbid he passes away at age 88. He would have distributed about $3 million out of his policy tax-free and still has about 1.2 million left over for his beneficiaries. But again, remember, he sold his business 10 years, or he's planning to sell it in 10 years. If he was to pay off this loan with a portion of that business sale, already taxed dollars, and come out of pocket to pay off this loan and not take it via a policy loan, his income would go from $130,000 a year at his age 65 to over $300,000 a year tax-free for the rest of his life. You're leaving the tax favorable dollars building for you in the policy and not taking those as a loan. So instead of getting a total of roughly $3 million in tax-free income over his lifespan, he's now able to take out about $7 million tax-free out of his policy and still have about over $1.4 million of death benefit left over for his beneficiaries or his family. So think of the outside loan being paid off with those outside dollars as a large cash Roth injection into the life insurance policy. No cap on how much you can contribute, no cap on how much you can pay back. If you had a client that wanted to pay for longer than the 5 years, they absolutely can. They're not required to. But any additional premium that the client comes out of pocket with over those 5 years that they're committing to just helps pay down principal and interest on that loan, therefore either turning the policy over to the client quicker, as well as increasing their income and death benefit on the back end. Lastly, I'm going to show you what an example of a 1035 exchange looks like. And then again, we'll open it up for some questions. So this is a 47-year-old male, has a current whole life policy who he's funding about $6,100 all the way up to his age 100. So another 53 years, he's going to put this $6,100 into this whole life policy. Not going to really be able to take out much income out of the policy whatsoever. Whole life policies, I'm sure some of you guys know, very expensive, long-term funding schedules, unless you're doing that short 10 to 20 pay, which it's very expensive to do that way as well. But by utilizing the 1035 with the existing cash value that's in his policy and leveraging that up into the Stream plan, there's about $92,000 in cash that he was able to 1035 over to the Stream plan. So that 92,000 plus just 1 year of 10,000 is going to represent that minimum contribution that we have of $20,000 a year if you break that down over 5 years. So by doing that into a Stream plan, not only is he not able to or not having to fund the policy for any longer, so he's saving 53 years of that $6,100 a year into the whole life by utilizing the 1035 exchange. And now at his age 65, by doing that, he's able to distribute about $39,000 a year tax-free out of his policy for the rest of his life. So if he lives to age 88 He's able to distribute over $900,000 tax-free out of his policy and still have over $500,000 of death benefit. Again, by only funding an additional $10,000 and saving that $6,100 over the next 53 years. Next, this is really just how to get a quote. So in order to get access to our Streamline agent portal, which I'll show you some screenshots of in just a second, is we make agents and advisors complete a stream training. It's 30 different videos that you would watch. It'll educate you on a lot of the information that we touched on today and really get into the nitty-gritty with our trust documents, that's ownership of the policy, with all of the client information that's needed to be gathered prior to going to the application. We go over our stress designs, different case studies, overcoming objections with the clients, walk you through the presentation that clients typically receive. Once that's completed, you reach back out to us at our team, and we grant you access to Streamline, which is our agent portal. Some of the things that you're able to do in our agent portal is you as the agents and advisors can run a quick estimate to get a better understanding of what somebody's potential tax-free income is by just entering 5 pieces of information. You can also run full quotes that'll pair a stream presentation with the insurance carrier illustration as well. You can collect all documentation from the client. This is what it looks like on the estimator screen. So these 5 pieces of information is what you'll need to enter. This is what the screen will look like once you enter in those 5 pieces of information. So you'll see the benefits overview. You'll see the leverage versus the income, as well as in-force policy feeds. So any policy that gets placed, agents and clients will be able to come into the stream portal and see all of the information, the cash value, death benefit, and outstanding loan balance. These are all updated with live feeds from the carrier. And then all of the documentation that the clients originally sign are all archived here in the portal for them. Everything through the portal is DocuSign. So clients enter in when they're invited and they're ready to move forward. They complete all of the documentation that we require. It's all DocuSign through the portal. And then we can move forward with the actual insurance carrier application, which also launches directly through the stream portal, where they can go in with the agent. I typically jump on a call for the first couple with the agent to make sure that they complete the applications correctly. It pre-fills out some of the information that you enter here in the portal onto the actual e-app, and then we're off and running into underwriting.
All right, Richard.
Questions that I'm not seeing here?
I think we got all the questions addressed from what I can see. I did a little quick research while you were presenting. It looks to me like the UCC filing that Biff is talking about has to do with if you're a lender and there's collateral involved, you have the ability to then call that collateral if the loan goes into default, or you can force foreclosure proceedings if you want.
Yeah, we cannot take second position on anything. The policy that the client is applying for, if they're using that for a buy-sell for whatever reason, the first collateral position is always going to be the bank. So all of our policies are collaterally assigned up back to the bank. That's why clients don't need to post any collateral with our program. We cannot use the stream plan as a second position on any type of filing like that.
Hope that answers your question, Biff. And as we go forward, if you have more interest in this, what I might suggest that you reach out to us and make sure that we've got at least your national life contracting in place. That'll be certainly our go-to carrier. We want to make sure that we've got your contracting all set up.
All of our policies are also written out of the state of Arizona. So agents need to be licensed in the state of Arizona, either resident or non-resident if you don't live there.
I'm glad you pointed that out, Richard. So if you don't have a non-res license in Arizona, my understanding is it's a pretty easy process there. It's been a while since I actually went through that, but should be.
Yeah, we offer a ton of support here at the Stream Plan. So I get on calls almost every single day with advisors that I work with, agents that I work with that want me to help position this to their clients as well. So we can be a part of sales meetings. If there's webinars or similar things to like we're doing now, where you have a group of clients that you would like us to help present to, we're very flexible. We can do live speaking engagements, whatever you guys really need from us, we offer that support. We also don't charge anything additional if we offer and give that support to you guys. So we're still going to go on the app for 25%, regardless if you lean on us for our expertise as much as possible, or just utilize us for our systems and everything like that. But again, please reach out to us, lean on us. The most successful advisors in positioning Stream really rely on us for a lot of our stuff because we're here to support. And again, we don't charge anything extra for that.
And I'll be sending Richard a roster of the folks who registered today, so he can make sure to make a note on their end that so when you contact them, if you do contact them directly, they know that you're affiliated with us. So
I'll send out, Bob, I'll send
Yep.
you a follow-up email that'll have a link to our training as well. So
Okay.
if you want to send that out to everybody, if they wanted to get started on the Stream training. And then again, if you guys wanted to schedule one-off meetings, please reach out to Bob and we can get something scheduled where we can dive a little bit deeper, answer any questions, or even send out some illustrations with some cases you may be working on.
Perfect. I don't see any other questions that came in other than Biff commented perfect. So we must have answered his question on the UCC filing, Richard. So I'll give you the last word.
Bob. Yep. Appreciate all your guys' time. And again, thank you so much for including me. I look forward to working with each and every one of you. And again, please don't hesitate to reach out if anything else comes up, questions, what have you. I'm here to support. My team is here to support. So whatever you guys need, just let us know.
Will do. All right. Thanks, Richard. Appreciate it. Please say hello to Nicole. Thanks, everybody, for being here today. And we will catch up with you soon. Again, as a reminder, we'll have the recorded version of this up on our website, advisorsib.com. You go to tools and resources and then archive training. You'll find this out. It takes a couple of days for us to get that up there. So thanks again, everybody. Have a great almost weekend, and we'll talk to you soon.
Sounds good. Bye, everybody.